Welcome to Talk Tickers. Today, we're digging into Trimble's Q2 2025 earnings. And let me tell you, this quarter told a really interesting story. Okay, so check this out. On the morning of August 6th, Trimble comes out with a fantastic quarter, a classic beat and raise. And, the market loved it. The stock shot up over 5% before the bell even rang. But then, poof, by the end of the day, all that excitement had just vanished. The stock closed completely flat. So what gives, right? That's the big question. To really get what's going on here, we have to look past those headline numbers and zoom in on a strategic transformation that's been years in the making. This wasn't some fluke. This strong quarter wasn't an accident at all. It was the direct result of a very deliberate multi-year plan to reshape the entire company and really double down on what it does best. And look, this didn't just happen overnight. Over the past year, Trimble has been making some big moves, aggressively streamlining its business. They sold off their lower-margin mobility division and formed a really smart joint venture in agriculture with AECO. And what's the goal here? It's all about sharpening their focus on their core, higher-margin platforms. And this is the perfect example of their core strategy, something they call Connect and Scale. It's really all about creating this one integrated ecosystem for their customers, moving everything to the cloud and building this incredibly powerful recurring revenue flywheel that will power them into the future. All right, so that's the strategy. But did it actually work? Let's get into the numbers for Q2, because this is where you really see it paying off in a big way. So yeah, Trimble just knocked it out of the park. A clean beat right across the board. Non-GAAP EPS was 71 cents, way ahead of the 63 cents Wall Street was looking for. Revenue came in just shy of $876 million, crushing estimates. But the real story here, the number you really need to pay attention to, is that 13% organic growth in annual recurring revenue. It hit a record $2.21 billion. That's the heart of the story. And this wasn't just one part of the business doing well. We're talking broad-based strength here. Their AECO segment, that's architecture, engineering, and construction, grew a massive 16%. Field systems showed an incredible 17% ARR growth, even with some headwinds. And the newly focused transportation business, it grew a solid 8%, even in what management is calling a stubborn freight recession. That's pretty impressive. And speaking of that transportation and logistics segment, check this out. After selling off that mobility business, this division is now basically a recurring revenue machine. We're talking over 90% of its revenue is now high quality and recurring. That's a direct payoff from that strategic reshaping we talked about. Okay, so they've cleaned up the portfolio, the numbers are looking great, so what's next? Well, management is looking squarely at the future, and they believe it's going to be powered by a massive and totally unique data advantage. I love this quote from the CEO, Rob Painter. He really frames up their unique advantage perfectly. He's talking about trillions of dollars in construction value flowing through their systems, tens of billions in freight, millions of people using their software, and hundreds of thousands of connected machines out in the real world, all feeding them proprietary data. So this incredible data set, this flywheel of information from both the physical and the digital world, that's the foundation of their AI strategy. It's not about some generic AI model. It's about creating value that competitors just can't copy because they simply do not have the data. It's a huge competitive moat. And look, management isn't just throwing around vague ideas. They've put a stake in the ground with a super clear financial roadmap. They call it 343 by 2027. And what does that mean? They're targeting $3 billion in ARR, $4 billion in revenue, and some very impressive 30% EBIT margins, all within the next couple of years. And they didn't just say it, they backed it up. Right away, they raised their full-year 2025 revenue guidance by a strong $100 million at the midpoint. Now that shows some serious conviction. They're not just hoping for these targets, they are clearly executing towards them. Okay, let's pull all of this together. We've got a smart, strategic shift that is clearly working. We've got accelerating financials, and we have a very clear data-powered path for future growth. Which brings us right back to where we started. That puzzling stock performance. After a day like that, how should investors be thinking about this company right now? When you lay it all out, the bull case for Trimble looks really, really strong. You've got this accelerating recurring revenue that proves their entire business model shift is working. You've got that unique data moat that's going to be a massive advantage in AI. Their connect and scale strategy is already driving higher margins. And on top of all that, management is being smart with their money, buying back stock and making strategic acquisitions.
So, with all that in mind, our rating here at the next call is an outperform. The execution on this multi-year transformation is just undeniable. We think the market just got hung up on the short term that day. That hesitation, in our view, was an overreaction, and it's created a compelling opportunity for investors who can see the bigger long-term picture.
This is not financial advice.